Welcome back to Oath&Ink Academy. Today we are diving into a topic that every notary absolutely must understand before they ever pick up a stamp. And yet it's one of the most overlooked subjects in the entire profession. We're talking about surety bonds and errors and omissions insurance. Now, here is a question worth sitting with. What would happen to you financially if a client filed a claim against you for a notarization error? Even one that wasn't entirely your fault. Would you be protected? Would your personal assets be at risk? By the end of this presentation, you will know exactly what these two protections are, how they work, how they differ, and why having both is the professional standard. Let's get into it. Before we get into definitions, let's start with why this even matters. Because some notaries treat protection as optional. It is not. First, consider this scenario. A real estate closing goes sideways because the notary performed the wrong notarial act on a deed. The transaction collapses. The client loses tens of thousands of dollars. They file a lawsuit. If that notary has no protection, their personal savings, car, and property are all on the table. Next, here's what many new notaries don't realize. Clients, lenders, and title companies can all sue you even if your mistake was minor or unintentional. The legal system doesn't care about intent, it cares about outcomes. Don't forget that as a notary, you are a legally authorized officer of the state. That title comes with real responsibility and real liability. Two layers of protection exist to defend you, and today we're going to break down exactly how each one works. Let's break down the surety bond first. And here's where most notaries get confused. A surety bond is not insurance for you. I want to say that again clearly. A surety bond does not protect the notary. It protects the public. First, understand the three-party structure. There is the principal. That's you, the notary who purchases the bond. There is the surety, the bond company that issues the bond and agrees to pay valid claims. And there's the obligee, which represents the public or the state, the party the bond is designed to protect. Next, here's how it works in practice. If you make a notarial error that causes someone financial harm, they can file a claim against your bond. The surety company pays that claim. But, and this is critical, the surety company will then turn around and seek reimbursement from you for every dollar they paid out. Keep in mind, the bond is a financial guarantee of your professional conduct. It's the state's way of saying, this notary has skin in the game. It is required in most states before you can even receive your commission. But it is not your safety net, it is the public's. Now let's get into the specifics of how a surety bond actually works in practice. First, let's talk about the money. The bond amount in Tennessee, that's typically $10,000, is the maximum a claimant can recover if you cause them harm. But that is not what you pay for the bond. What you pay is the annual premium, which is a small percentage of the bond amount. Most notaries pay between $50 and $150 per year. Very affordable. Next, look at the claim flow on this slide. A notary error happens. The harmed party files a claim. The surety investigates. If the claim is valid, the surety pays up to the bond amount. Then, and this is the part that surprises people, the surety comes back to you for repayment. Step 5 is what makes a surety bond fundamentally different from insurance. Remember that the bond exists to make injured parties whole. It is not a safety net for the notary. It is a financial guarantee that says, if I, the notary, cause harm, there is money available to compensate the victim. Your actual financial protection comes from something else entirely, which we'll cover next. Now we get to the protection that actually defends your wallet. Errors and Omissions Insurance, or E&O for short. Here's the key distinction from a surety bond. E&O insurance is purchased by you for you. First, let's define it clearly. E&O insurance is professional liability coverage specifically designed for notaries. When a client or third party claims your notarial act caused them financial harm, whether you made an honest mistake or are being falsely accused, your E&O policy steps in. Next, look at what it actually covers. Your legal defense costs, including attorney fees and court filings. Settlement amounts if the claim is resolved before trial, court-ordered judgments if you lose at trial, and claims of negligence, meaning honest mistakes made in the course of performing your notarial duties. Be aware that you can be sued even when you did nothing wrong. A disgruntled client can file a lawsuit claiming you made an error. Without E&O insurance, you are paying an attorney out of pocket from day one, whether you're guilty or innocent. E&O insurance means you have a financial team defending you. That is why this coverage is not just smart, it is essential. Now let's look at the E&O claim process and understand what the numbers actually look like. First, coverage amounts typically range from $25,000 to $100,000 per occurrence. For a notary doing general work, wills, affidavits, consent forms, a $25,000 policy is often sufficient. For a notary handling real estate closings, loan signings, or high-dollar documents, I strongly recommend a $100,000 policy. Why? Because real estate transactions involve enormous sums of money, and claims in that space can be very large. Next, the annual cost is surprisingly affordable. Most notaries pay between $55 and $250 per year for E&O coverage. Think about that. $200 a year to have an attorney assigned to defend you in a lawsuit. That's less than most people spend on takeout in a month. Keep in mind what E&O does not cover: intentional fraud and criminal misconduct. If you knowingly falsify a notarization, no insurance policy will protect you, and you shouldn't expect it to. E&O covers mistakes, honest mistakes made by a professional trying to do their job correctly. That is you. Get covered. Now let's put both of these side by side so the distinctions are crystal clear, because confusing a surety bond with E&O insurance is one of the most common mistakes notaries make when planning their protection strategy. First, look at who each one protects. The surety bond protects the public and the state, not you. E&O insurance protects you. That single difference changes everything about how you think about each one. Next, look at what happens when a claim is paid. With the surety bond, the surety company pays the claimant and then comes back to you for reimbursement. With E&O insurance, the insurer pays and you are covered. You may owe a small deductible, but you do not write a check for the full judgment. Look at legal fees. The bond does not cover your attorney costs, and E&O insurance does, from the first hour of the first consultation. Take into consideration that these two protections are not interchangeable. They serve completely different purposes. The bond satisfies your state requirement and protects the public. The E&O policy is your personal financial shield. You need both. Having one without the other leaves a significant gap in your protection. Let's zoom into Tennessee specifically, because state requirements vary. And if you're a Tennessee notary, this is exactly what applies to you. First, the surety bond. Tennessee requires a $10,000 surety bond before your commission can be issued. This bond must be filed with the county clerk in your county of residence, and it runs for the same 4-year term as your notary commission. You cannot skip this step. It is a legal prerequisite. Next, E&O insurance in Tennessee. And here's something important. Tennessee does not legally require E&O insurance. The Secretary of State's office recommends it, but it is not mandated by law. However, and I want to emphasize this, just because it's not required doesn't mean you shouldn't have it. Be aware that title companies, lenders, and signing services increasingly require notaries to carry E&O insurance before they'll hire them. If you want to work with those companies, and you should because they represent significant income, you need that coverage. Think of it this way. The state sets the minimum. Your professionalism sets the standard. Get the bond because the law requires it. Get the E&O because your business depends on it. Theory is important, but real-world scenarios are where this becomes truly tangible. Let's walk through 3 situations that actually happen to notaries and see exactly how each protection responds. First scenario, you use a jurat on a real estate deed when an acknowledgement was required. The title company rejects the document, the closing is delayed, and the buyer loses over $3,000 in carrying costs. The surety bond protects the buyer. They can file a claim. Your E&O insurance defends you in any resulting lawsuit. Second scenario, a signer presents a fraudulent ID. You follow standard procedure and accept it, but the document later gets challenged. You did everything right, but you're still named in the lawsuit. Your E&O insurance covers your defense costs even though you acted in good faith. This is one of the most important things E&O does. Defend you even when you're innocent. Third scenario, you complete a power of attorney but accidentally leave your official seal off the document. It goes unnoticed for months. When it's finally discovered, the principal has suffered legal and financial consequences. Be aware that even small unintentional errors carry real liability. The surety bond and E&O insurance together create a complete shield, protecting the public from harm and protecting you from financial ruin. All right, you now understand what both protections are and why you need them. So let's talk about exactly how to get them, because action is where knowledge becomes valuable. First, it all starts with your notary commission application. In Tennessee, contact the Secretary of State's office and begin your application. You cannot legally notarize anything without a valid commission, and your commission requires a bond. Step 2. Purchase your surety bond. The National Notary Association, Notary Rotary, and many insurance companies sell bonds. For Tennessee, that's a $10,000 bond. Budget under $100 annually. It's one of the most affordable professional requirements you'll ever have. Step 3. File the bond with your county clerk. In Tennessee, this is a required step before you can begin notarizing. Keep a copy for yourself and document the filing date. Step 4. Purchase your E&O policy. The NNA is one of the most recognized providers in the notary space. Choose a coverage level based on the types of documents you'll handle. If you're doing real estate work, go higher. Step 5, and this one is so important, keep both current. Mark your calendar 60 days before any expiration date. A lapsed bond or expired E&O policy leaves you completely unprotected. No grace period, no partial coverage. Stay current, stay protected. I want to take a moment and just talk numbers, because sometimes the clearest argument is the simplest one. First, let's look at what protection costs. A surety bond, approximately $100 per year. E&O insurance, approximately $200 per year. Total annual cost for complete protection as a notary, around $300. That is less than $1 per day. Next, let's look at what a single unprotected claim could cost. The average real estate closing claim, one error on one document, can exceed $45,000. Attorney fees, settlement costs, court costs. $45,000 for one mistake on one document. Keep in mind, at $300 per year, you would have to pay premiums for 150 years before you equal the cost of one average claim. The math is not complicated. The question is never, can I afford E&O insurance? The question is, can I afford not to have it? The answer after today should be very clear. Let's work through the most common questions I hear from notaries on this topic, because I know some of you are thinking these right now. First question. Do I need E&O insurance if I already have a surety bond? Yes, every time. The bond protects the public. E&O protects you. They are not interchangeable. Having only a bond is like wearing a helmet to protect bystanders while you ride a motorcycle. It does nothing for you personally. Second, what if I only notarize occasionally? Liability does not care about frequency. One document, one error, one lawsuit. Your personal assets are just as exposed from your first notarization as from your thousandth. Third, does homeowners insurance cover you? Almost never. Standard policies explicitly exclude professional services and errors. This is why purpose-built notary coverage exists. Fourth, can you get both from one provider? Yes, the NNA and others offer bundled packages, often cheaper than buying separately. And fifth, what if your policy lapses? You are completely unprotected during the gap. A claim filed the day after your policy lapses is your full financial responsibility. Set those renewal reminders. Never let coverage lapse. Let's bring this all together with 6 protection rules every professional notary should live by. Rule 1. Always carry both a surety bond and E&O insurance. Not one or the other, both. They serve different purposes and fill different gaps. Rule 2. Know your state's bond requirement and keep it current. In Tennessee, that's a $10,000 bond for your full 4-year commission term. Rule 3. Choose coverage that matches your risk. If you're doing general work, a $25,000 E&O policy may be enough. If you're handling real estate closings, go to $100,000. Don't underinsure. Rule 4. Never let either policy lapse. Put renewal dates in your phone today. Set 2 reminders, one at 60 days out, one at 30 days out. Rule 5. Document every single notarization in your journal. Your journal is your first line of defense if a dispute ever arises. Clean records tell a clean story. Rule 6. If a client raises a concern or you suspect a complaint is coming, contact your E&O carrier immediately. Early notification is a policy requirement, and it gives your insurer maximum time to build your defense. These 6 rules applied consistently make you a professional, not just a certified notary. Stay protected, stay informed, and keep serving your community with excellence. And that is a wrap on today's lesson at Oath&Ink Academy. Let me leave you with 3 sentences that summarize everything we covered. A surety bond protects the public from your mistakes. E&O insurance protects you from the financial consequences of those mistakes. You need both, and now you know exactly why. You came into this video with a question, and you're leaving with an answer, a framework, and an action plan. Knowing is not enough. Act on this. If you don't have both protections in place today, make it a priority this week. The investment is minimal, the protection is enormous. If this video helped you, please like it and share it with a fellow notary who needs to hear this message. Subscribe to Oath&Ink Academy for more professional-grade notary education. We're building a complete curriculum for serious notary professionals, and I want you to be part of it. I'll see you in the next one.